Okay, you guys, we'll now take a look at exercise 10.9 on page 538. Here we have, we're still working with this break-even sales in units formula and some variations of it again. And then I'm also going to give you target profit sales in units, the formula there as well. But let's read through it. Hamilton Company sells its only product for $50 per unit. So there's your sales price per unit. Fixed expenses are $800,000 per year. That would be this number. Variable expenses are $1 million when 40,000 units are sold. Okay, we're going to have to do some calculations there. How many units must be sold to earn a net operating income of $75,000 or a profit, target profit of $75,000? If that's their goal, how many units would they have to sell? Well, the first thing we're going to have to calculate here is variable cost per unit. For some reason, I like that better here. Okay, our variable cost per unit. Well, variable cost in total are $1 million when we sell 40,000 units. Remember, variable costs are ones that increase when production increases and decrease when production decreases. So if variable cost were $1 million at 40,000 units, we can take the $1 million cost divided by 40,000 units. And we get $25, our variable cost per unit. Okay, now let's set up something like we had in the previous exercise to calculate our contribution margin per unit. We got sales, or let's do sales price per unit. It was $50. Our variable cost per unit $25. So our contribution margin per unit is the difference. 50 minus 25, of course, is 25. Okay. Now, if we want, I'm going to call, they're wanting to make a profit here of $75,000. I'm going to call that their target profit sales in units. In other words, how many units would they have to sell or slay, as I've got it typed out. Let me try that again. Target profit sales in units. In other words, how many units would they have to sell to hit this target profit of $75,000? Well, your formula there is the same as up here, except in the top we're going to add desired profit. Okay, so how many units would we have to sell to get this desired profit of $75,000? Well, here's our formula. We'll say our fixed cost, which were $800,000, plus the target profit of $75,000, divided by our contribution margin per unit of $25. and that's not a dollar amount. Instead, that's 35,000 units would need to be sold to hit that target profit of $75,000. Okay. Just another variation on this formula, plus we added in a new one here, or at least new to this course. Okay, you guys practice that one and be ready for one like that on your final. Thanks a lot.